Welcome back, my friends. Thank you so much for tuning in. This is Silver Slayer, so now let's talk silver. I cannot stress enough how extremely important it is to own physical precious metals, gold and silver. I talk about silver a lot, but gold is just as important. When we talk about precious metals, we're not just talking about something to get rich. Silver is what makes you wealthy. And every time I say silver, replace that word with gold as well. Silver just has more opportunity. But don't think that I'm not also stacking gold on the side, because I am. Now, I found an interesting article titled, "Is the World Ditching the US Dollar?" This is very important because they also do incorporate precious metals' place in this inevitable situation, which is the dollar collapsing. And as all these other countries are turning their back on the dollar with the BRICS nations, we're going to be in a very sticky situation very, very soon, especially now that we have banks collapsing. So we're going to go over this article. I hope you stick all the way through. If you think this video is informational, educational, or at least entertaining, make sure to hit the like button. Make sure you subscribe because I do post daily videos. If you want to buy some of this shiny stuff, gold or silver, make sure you check out Miles Franklin. Andy Sheckman's the CEO. Just send an email to info@milesfranklin.com. Let him know Silver Slayer sent you. So let's look at this. Dollar falling, gold rising. What's the plan? The US dollar's taken center stage in the world's economy as major countries are reaching agreements to stop trading with the US dollar and use their own currencies instead. Now, why is this so important? Well, see, the US dollar is the world's reserve currency. Everyone across the world relies on the dollar's strength, and BRICS nations, which is Brazil, Russia, India, China, South Africa, saying, and other countries, by the way, are saying, screw this, let's make our own digital currency backed by physical commodities, basically kicking America off to the side to float away on our own. Now, what's going to happen since our dollars would not be worth anything to the extent that they are? Well, that's what everyone's worried about. Right, that's where this whole gray area comes in, because we've never been in this situation before. The only thing that we can for sure say will survive during this apocalyptic financial collapse or this event would be precious metals, safe haven assets, because they are detached from the dollar. Stocks are attached to the dollar. It's like switching seats on the Titanic. If you're transferring your dollars, fiat, into anything else that's pegged to fiat, that's going down with it. Precious metals and cryptocurrency, some could argue, are the only two things you could put your money in that are completely detached from the dollar that could or would survive during these times. So, the US dollar's taken center stage in the world's economy as major countries are reaching agreements to stop trading with the US dollar and use their own currencies instead. Even the G7, right? You have Japan, country that used to be in agreement with us, are turning their backs. Rightfully so, as the United States is digging their greedy little hands in every little nook and cranny of the world. Of course, people are going to say, screw this. As the world's reserve currency, the US dollar is essentially the default currency in international trade and a global unit of account. And because of that, every central bank, treasury, exchequer, and major firm on earth keeps a large portion of their foreign exchange holdings in US dollars. And because holders of dollars seek returns on those balances, the ubiquity of dollars drives a substantial portion of the demand for US government bonds in the world financial markets, perhaps not anymore. China, the superpower, wants things their way. 2 weeks ago, the Brazilian government, remember, Brazil, BRICS nations, the largest economy in Latin America, revealed that they had reached an agreement with China, the prime opponent to U.S. economic power. Brazil wants to settle its immense trade with China in Chinese yuan as part of their arrangement. The two countries will be able to exchange their currencies directly. The expectation is they will soon reduce costs, promote even greater bilateral trade, and facilitate investment, the Brazilian Trade and Investment Promotion Agency said in a statement. Last year, an unprecedented $150.5 billion in a two-way trade occurred between China and Brazil, and China engaged in similar activities with other nations, including Russia and Pakistan. another country in the BRICS nations. Today, Brazil is the largest recipient of Chinese investment in Latin America, driven by spending on high-tension electricity transmission lines and oil extraction. Remember, oil extraction. A lot of these countries are some that are going to still be producing oil, as we're talking about Brazil, Russia, India, China, South Africa, many more. Of course, they're not going to want to go green, as the United States, more specifically Joe Biden, is pushing this new Green Deal that would directly affect their, their business. I mean, we're talking about oil versus new green energy, two completely different directions. And if the entire world goes green, what would happen to oil? You could see why they would not want us to go green, and also why they might be buying up all the silver, since silver has such a direct effect on if we can go green or not, which right now we don't have enough silver to go green. And India, another country in the BRICS nations, is buying 700 million ounces of it. It might only make sense that that's another reason why they might be buying all these precious metals, besides just their currency backed by gold. In the past, due mainly to U.S. position as global economic power, Brazil would first convert their purchases and trades to U.S. dollars before a transaction would occur with China, but not anymore. The idea that Brazil will transact with China directly without the U.S. intervention is just one of many countries that no longer trust the U.S. to begin doing the same thing. Times have changed around the world. I mean, the United States is still $31 trillion in debt, folks. $31 trillion. And we're spending billions overseas, billions to go green. This situation is only going to get worse, way worse. And the pandemic only exposed or sped things up tenfold. Regardless if the pandemic happened or not, I would still be sitting there saying, buy precious metals. It's not something that kind of just happened. This was designed to fail. It's like trying to get yourself out of debt by replacing it with more debt. That's like trying to pay off a credit card with another credit card. It was going to catch up to us as soon as we got rid of the gold standard in 1971 and our money wasn't backed by anything. Of course it was going to. And this time is now coming. The dollar's lost 98% of its original purchasing power. Not 97%, not 99%. 98% is an actual percentage. What happens when it does hit 100%? The U.S. no longer looks as socially or economically stable as it was just a decade ago. Now, an increasing number of nations are eager to find alternative financial systems to insulate themselves from Washington's willingness to use sanctions as political leverage. Joint efforts to decimate the U.S. dollar are also being discussed by Brazil, Russia, India, China, South Africa, known as the BRICS. Which, if you're someone who frequents my channel and you've seen Andy Scheckman and I's show called the Silver Stacking Podcast, Andy dives deeply into the BRICS nations. So, let's look at this. Well, they're also encouraged to dodge the euro and find alternatives to the U.S. dollar-dominated SWIFT secure messaging system global banks use to transfer funds. Earlier this month, South African foreign minister told the media she has 12 new nations expressing interest in joining the cash alliance. Saudi Arabia is one, she said, along with the United Arab Emirates, Egypt, Algeria, Argentina, Mexico, Nigeria, and Brazil's new deal with China is another sign of the informal cooperation behind BRICS is taking effect. In the meantime, Saudi Arabia, Iran, India, the United Emirates have begun exploring alternatives to the U.S. dollar when paying for oil, right? They have cause to do so. The vast majority of energy, oil and gas contracts are invoiced in U.S. dollars, so energy prices typically move together with the U.S. dollar. And think about that. Think about what that just said. Energy, oil and gas contracts are invoiced in U.S. dollars, so energy prices typically move together with the U.S. dollar. But what happens when they, and already are detaching that, aren't invoiced in U.S. dollars? For energy importing countries, this means that measured in their own currency, they adverse impact of higher energy prices And that is by an appreciating U.S. dollar. China has made some concerted efforts to expand the use of the yuan, for example, through the Belt and Road Initiative, right? And I've talked to Andy, I've asked him directly to dive deeper into the Belt Road Initiative. It's basically like this whole transportation system with trains and all this different stuff to connect the world through this whole system of trade, right? But in Russia's invasion of Ukraine and China's aggressiveness towards Japan, Taiwan, the Philippines, Malaysia, Vietnam, Indonesia, and India is forcing the world to choose sides. As the world becomes more divided by this war, China's yuan may become more safe for Russia and other like-minded countries. Henkel believes the Chinese yuan will continue to rise as a global currency, but only to a point. I still think that this new digital currency backed by physical commodities would be the one that would take over. I mean, this is all speculative to some extent right now, as we are in gray waters, and that's why a lot of people are trying to predict what the United States would do or predict what this would happen or how this. But we are in a situation that is historical to all means necessary and is something that we cannot even try to predict or assume what would happen or assume what countries are going to do what, because we are living in extremely crazy times, so expect extremely crazy things to happen. According to Peter Earle, an economist with AIER, which is the American Institute of Economic Research, the dollar in some shape or form will be around for a long time, perhaps very long, but by weaponizing dollar dominance and permitting expanding mandates to disorient U.S. monetary policy, the dollar's fate as a lingua franca of the world commerce over long haul may already be sealed. However this plays out over the coming years, this scenario appears to be another in a series of recent blows to the central role of the dollar in global trade. So, I want to get more to the metal stuff. I'll link this article in the description if you want to read all this other stuff, like the impact of our financial markets due to the recent decline of the dollar. But I want to go into gold and silver playing into this, which seems like it's down here. So there was an immediate benefit to our stock market as well as many commodity markets, including gold and silver. See the inverted table below showing how the decline of the US dollar has benefited other markets. So you can see there's a direct correlation between gold and silver and the US dollar, or I'd say a direct negative correlation. When the dollar goes up, gold and silver goes down, and vice versa. So with the US dollar decline, metals, gold, silver, and miners may be the biggest beneficiaries. Last year, Mish, as well as several of our other investment strategy algorithms, began to identify a potential dollar decline. Today, several of our investment strategies are invested in gold miners, and other commodity-related ETFs and companies. Gold is closely tracking the US dollar decline and is close to reaching a triple top. Quite often, when the underlying securities commodities break through a triple top, it is off to the races. And yes, I've seen many other charts or analysis showing that gold and silver are in an extreme bull market or in a bullish position. Moreover, if you look at the long-term movement of gold's consolidation, you will see what appears to be a cup and handle formation. The breakout from a cup and handle tends to be very bullish. See the chart below. And that's what I was talking about. We also have Representative Alex Mooney, joined by Reps Andy Biggs and Paul Gosar, both Arizona Republicans, reduced H.R. 2435, which is a gold standard restoration act to facilitate the repegging of the volatile Federal Reserve note to a fixed weight of gold bullion, which is huge, trying to bring back or successfully bringing back the gold standard. So upon passage, this H.R. 2435 of the U.S. Treasury and Federal Reserve are given 24 months to publicly disclose all gold holdings and gold transactions, after which time the Federal Reserve note or dollar would be formally repegged to a fixed weight of gold at its then market price. And that's the most interesting portion of this is, what would the fixed weight of gold be, the price at least? And they're saying it would be at the time what gold's price is. This would be very positive for gold and gold mining stocks and give additional ammunition for a rally higher in this sector. So, yeah, and when we, like I said, when we talk about gold, you could also replace that word with silver, and silver would be even would have even more opportunity, because yes, we're talking about this from a microeconomic view, even you could say geopolitical, but when you're looking at the fundamentals of supply and demand, I mean, silver is off to the races to a completely different degree than something like gold is, since silver has such a huge role in the industrial sector. And when I just made a video yesterday where they're showing how much potential silver has, since it is more of an industrial metal than a monetary metal like gold is, and why that is really what's going to push silver through the roof, not so much just inflation and you know, that type of thing like gold is. So silver's the best of both worlds to some degree, if you want to look at it from that place. So anyways, I thought this was an interesting article. Remember to subscribe if you liked the video. Please like the video. If you thought it was educational, informational, at least entertaining, make sure to hit the like button. Let me know what you think down below. Remember, I also am honored to be able to give you guys a direct business relationship with Miles Franklin. Andy Schechtman is the CEO. Great guy, most respected company. They're still one of the only few authorized dealers that works with the U.S. Mint, which is a huge deal, since the U.S. Mint last year banned everyone from buying directly from them. Only a few people can. Andy is still one of them. And yeah, I mean, it's like buying from your friend. Andy's always on my channel. I can call him for you or something if something ever occurred, and he can make it right. That's one of the reasons why they've never had a negative complaint in over 35 years, is because, yes, if they make a mistake, they'll fix it. Right, that's the most important part. And I've heard some very disturbing stories from other sites, including myself having to deal with some, and I can guarantee that would never happen purchasing through them. Send an email to info@milesfranklin.com. Let them know Silver Slayer sent you, and also make sure to subscribe, as we are on the road to 100,000 subscribers. I'll be doing some more giveaways soon. May the luckiest stackers win. Thanks for tuning in. This was Silver Slayer. I'll see you guys soon. Peace.